Yeah, I think there's a general rule of thumb that you can go by that's, if you think you're going to owe more than $1,000 in taxes, you should either be making estimated payments or adjusting your withholdings to account for the taxes that you are going to have. There are some calculations you make that, you have to be within a certain amount of last year's tax bill or this year's bill in order to not have penalties. But ideally, if you can kind of target, that $1,000 range, and if you're going to go over it, then you need to adjust and try to figure out what that adjustment is. So again, most business owners should be making quarterly payments because hopefully most business owners have profits. All right. And if they have profits, there are no taxes coming out of those profits. Okay. And so you've got to pay as you go and make those quarterly payments. So when we work with our clients, we do projections on where their business are, typically at the 6-month period. We'll kind of run the numbers and say, okay, you've got X in profits and your exposure on that is X in taxes. So let's get that paid in, or at least, make a plan to do so.
They say there's no silly question, but I'm going to ask one.
There are none.
My silly question for the day is, all right, say I want to pay the IRS a little money. If I'm your client, is that a check that I would write to you and you would keep it in safekeeping? Or do I mail it in? Like, do I put it in a separate account? Do people ask silly questions like that? And if so, what's the answer?
You would be surprised at the questions that we get. So no such thing as a silly question. And, certainly we are not going to take the money. We want you to deal directly with the IRS. Mailing a check is old school, right? The IRS has a nice direct pay website. You can go online, you can pay, and you can have the money automatically drafted from your account on, whatever date you want it to, and you can tell it specifically what it's for. And make sure you tell your accountant that you've done that so that we can incorporate that into the tax preparation when we do it. But they've made it easy for you to make those payments. I don't ever want to hold anybody's money. That's not something that I want to do. And certainly, we're not going to make those payments. We don't want to be on the hook for that. We deal with a lot of clients. And so, we advise them on how to make those payments and get set up and do that directly.
Yeah, that's awesome. So you help businesses set up their entity, the web on for the IRS, that kind of thing.
Correct. That's correct.
That's wonderful. All right. So what if I want to change my strategy mid-year? Maybe I wasn't smart before I met you, and then we sit down and you're like, let's change up this strategy. How do you adjust that estimated payment for cash flow management?
Yeah, so absolutely, you can make the change at any point in time throughout the year. And certainly if the situation is changing, maybe you're having a really bad quarter or a good quarter, you can make the adjustments. So it's very easy to do. The key is have your advisor run the projection to figure out what your exposure is, and then just calculate the numbers. And then you can make the payment, at whatever level makes sense. Typically, when we deal with our clients, when we do their tax return for the current year, we're going to take a first stab at what we think the estimates should be based on the information that we know. And, we may ask the client, hey, what do you think the upcoming year is going to look like in terms of income? Is it going to be more or less? And then we'll come up with projections for those estimated payments. But we like to have a mid-year check-in with our clients where we say, okay, we were expecting this. How are you tracking? What do the numbers look like? Are you doing better or worse? And at that point, we'll adjust it. And then again, at the end of the year, before the end of the year, when we do our tax planning meeting, we're going to get, we'll have most of the numbers for the year. So at that point, we'll do a mock-up of their tax return based on the information we have. So the clients are going to have a really good idea what their situation is going to look like. And then we'll do another projection. Say, okay, we need to adjust the estimates by X. And so we just go ahead and do that. So it is something that you can easily change, and, you're not locked into a certain amount, when you do it at the outset. So, you always want to, again, adjust for things that may be, affecting your situation. Maybe we're going to make some tax strategy moves at the end of the year where we're going to reduce some expenses, or we're going to increase some expenses, whatever that looks like. And we need to, make the adjustments there. So it's a moving target for sure. And again, something you should manage, not something that you should wait until March and April when you dump that stuff off to your accountant and say, okay, here's my stuff. Just tell me what the outcome is, right?
Well, and talking about the IRS, I think everybody universally is afraid of the word audit. But can you tell us a little bit about audit risks and maybe the difference between how you designate your entity and what those comes with that? What risks come with that as far as from an audit standpoint?
Absolutely. And, yes, there's a certain level of fear when people hear IRS, they tend to freeze, right? Or they get, a little bit intimidated by that. We don't fear that. Number one, we're not ever going to do anything that's going to jeopardize those licenses that are on the wall, right? So we're going to give you good advice. We're going to, we might get into gray areas where there's things that are open to interpretation. But at the end of the day, I want to be able to sit across the table from an IRS examiner and explain my position and make it defendable. And so that's the position we're going to put you in with all of our strategies and anything that we do. So I don't fear an audit. And thankfully, it doesn't happen very often. It's very rare that there's audits. And when you do things the right way, you don't need to fear an audit because you just provide the documentation that they need so that the IRS can navigate through whatever it is they're trying to figure out. And then you move on. So it's not a big thing. Certain types of entities tend to get audited more than others. A sole proprietor, somebody that files their business as part of their personal tax return on Schedule C, they have a higher tendency to be audited because there's less structure around that from an accounting and bookkeeping standpoint. And so the IRS kind of would hone in on that a little bit more than they would an S corporation or something like that. So the type of entity could have an impact. But again, the rate of audit is very, very low. And if you're doing everything above board, you don't need to fear an audit. You just have to be able to defend what you have. So it's very important to know what types of records you need to keep, what documentation is appropriate. And we do advise our clients as part of our, upfront advisory services. Here are the types of records you need to keep. Here's the stuff you need to, to document, and here's how you should do it. And, you need to keep receipts. We don't need to see them, but you need to keep them in case you're ever called out on any of the expenses that you're claiming.
Mark, it's been a true pleasure to talk to you today because I do think that the one thing that you do for people like me is take the fear out of taxes, these words, IRS, business entity, like all of these things that we, maybe that's not our specialty. Maybe our specialty is completely different. It could be from fixing cars to creating beautiful, pieces of fabric, beautiful dresses or something. You know what I mean? We're all in different, these different subject matters, but this is your niche. And so for us, I think it's really great that you take the fear out of it. And so I really appreciate you being with us today and can't wait to talk to you next time.
Hey, Jody. Well, I appreciate it as well. And I think one of the things that we excel at with our business is helping people understand the tax law. We're pretty good at translating tax speak to plain English. And so, it is, like you said, that's our craft. We study it. We know it. We spend a lot of time finding ways to help business owners be strategic in the way they manage their business and their tax situation. And so we're the experts in that. Much like you as a business owner know your craft and what you do, this is our business. This is exactly what we do. And so we can be a great asset for you. We're part of your team and we want to help. And that's why I come to work every day. I love working with small business owners. I get a certain amount of energy just from seeing a business owner who's taken a concept and an idea and made something out of it that makes money that can support them and other people. It's just a great, great feeling, and I love it.
Well, it's really supporting the American dream, for thousands of people. And so we appreciate all that you do. And again, can't wait to talk to you next time.
Same here.